Hello, everyone. It's Stephen Whiteside here from theuptrend.com with this weekend's edition of Protect Your Portfolio. Well, we're halfway through December, and I thought we'd focus a little more on getting ready for 2025. And we covered some of this last week, so some of this is going to be a little bit of a repeat. But if we look at the seasonality chart right now for the VIX for the S&P 500, it should be moving up a little, and we saw a little bit of that tension this week as the VIX moved up into the channel. It is still on a weekly and a daily sell signal, which is supportive for higher stock prices. So not a lot has broken down so far for the major ETFs, but the underpinnings of the market are looking really weak right now. Now, for the S&P 500, we do get a little pullback in the middle of the month and then a rally into year end. We'll have to see if that works out this year. Now, the S&P 500 is still on a buy signal, but the equal weighted S&P 500 keeps going lower. So it is a handful of those big cap tech stocks that are still holding the market up. That is also true for the NASDAQ 100 that hit a new all-time high on Friday. Now, at the same time, we've got the equal weighted NASDAQ on a sell signal, so that's not very helpful. And we've got the Russell 2000 on a daily sell signal as well. So currently we're looking at daily charts, and as you can see, the headline numbers, the S&P 500, the NASDAQ both hitting new highs, but the equal weighted versions of those ETFs are not hitting new highs. In fact, they're on sell signals. Now, when I was a kid, if I had have turned on the radio and there was a report on business, they would have started off by telling you what the Dow was doing. It's on a sell signal. They would have told you what the transports were doing. It's on a sell signal. And what the Dow utilities are doing. Those were the three biggest and oldest indices out there, the industrials, the transports, and the utilities. And those are all on sell signals right now coming into this weekend. Now, if you get the hint that the underpinnings of the market are looking pretty weak at the moment, then you're getting the message. Now, last week at this time, we looked at the percentage of stocks on the S&P 500 above their 200-day moving average, and I noted that we've got a huge divergence here with the indice making a new all-time high and fewer stocks making all-time highs or trading above the 200-day moving average. Now, last week at this time, I was looking to see if we would hold those recent lows, and what do you know? We broke down below those lows. So the market is getting weaker as time passes into the month of December. That is also true for the Canadian market. And last week at this time, we were up here, we broke down, and the Canadian market is starting to roll over as well. Now, is the market cheap or is it expensive? Well, we looked at two indicators last week, the Buffett indicator and the Shiller price earnings ratio. Now, this is what the Buffett indicator looks like, and what he's trying to measure is the stock market cheap or is it expensive versus the economy? And there's the dot-com bubble. There's the housing bubble in 2007 that drove the market down. There's the recent 2021 peak, and here we are even higher right now. So yes, we are extremely overbought. Now, this chart is a little outdated. It's from September, but the line down here is the historical trend. And at that time, we were two standard deviations away from the mean. So at some point, we are going to come back to that level. We don't know when that's going to happen and when it's going to start. But by any means, the stock market is extremely expensive right now, and this is not the right time to be putting long-term money into the market. Now, looking at the PE ratio, we've got something similar here. This particular chart goes back to the crash at 29 back there. And then, of course, you've got the dot-com bubble. So we're not currently as expensive as the dot-com bubble, but, we're up there. We're incredibly expensive at the moment. And what caught my eye was a couple of things. First of all, the long-term average is 17.5, and here we are up at 38. If you split the difference between the recent low, I mean, the all-time average, goes back all time. If we take the low from back here and we go up to the recent high, the middle point is, in the late 20s here, up near 28. So a pullback to that level in 2025 wouldn't be that unexpected. Now, why do I think there might be a pullback in 2025? Well, some of the people that I follow really closely have been posting charts regarding the cycle of the price earnings ratio. And here we are with one example chart. And right now we're looking at the cycle peaking and rolling over in 2025. Now, the cycle peaking doesn't mean it's going to have a complete drop. We have no idea. We can't predict the future. It's just the tension's going to come off that and we're going to start coming back down. How far we go down, how fast we go down is yet to be determined. But from a cycle analysis point of view, this is the peak of the cycle and we should be heading lower in 2025. Now, I have lots of example charts. I posted a couple last week. What happened in 2021, where the market looked very similar to how it looks today. In 2022, of course, we rolled over. And then it was just fun to go back to 1961, where that was a great year for the stock market. And then 62 was a hard year for the stock market. So there's some examples where we've got some correlation between previous historical movement in the market and what the market is doing today. Now, it's impossible to factor in what's going to happen when Captain Chaos takes office in January. It looks like he wants to send the economy into a giant recession. Whether that hurts the stock market or not is yet to be determined. And bad things can happen to the economy, but if they change the tax rules for the rich and especially change the tax laws for stock market gains, then that could certainly help the stock market. So we could watch the economy fall apart and the stock market to continue to move higher in 2025. We will just have to wait and see. Well, I keep mentioning that it's a group of big cap tech stocks that is really leading this market higher. And there's the NASDAQ 100 making a new high this week. There's a new all time high for the Magnificent Seven ETF on the back of Tesla, which is up over 12%. So another big week for Tesla. Then we had Broadcom, we had Marvell, a couple of chip companies making new 52-week highs. In Canada, it was Celestica, Dye & Durham, and Descartes all making new 52-week highs this week. Now, what didn't work? Well, it's interesting that both Bell and Rogers made new 52-week lows. And then in New York, Canadian National Railway made a new 52-week low. That's not what happened on the TSX, but I guess due to currency conversions, we have a new 52-week low for CN. Now, notice that CN cratered last fall and then had a nice move up. Maybe we'll see a nice move up for CN in 2025. Now, looking at the VIX or the fear index on a weekly basis, we're still on a weekly sell signal. That's supportive for higher stock prices. So that would change this coming Friday if we closed above 1893. On a daily basis, coming into Monday, we're still on a daily sell signal. And so on a short-term basis, we're bullish on the stock market. That would change on Monday if we were to close above 1434. Now, looking at a weekly chart of the S&P 500, a small pullback, a little over 0.5%, while the NASDAQ 100 was up 0.75% and change. At the same time, we had the Russell 2000 issuing a new early warning signal on the weekly panic zone chart. It was down nearly 2.5% on the week. So the Russell 2000 peaked 3 weeks ago and has been down the last 2 weeks. That is also true for the small cap stocks, down over 2% on the week, while micro cap stocks were down 2.69%. So some of the risk off trade is happening at the moment, but no new sell signals in the U.S. market. What happened this week that didn't work? Well, marijuana stocks, which most American investors don't watch. Canadian investors have a lot more interest in marijuana stocks as most of the major companies are in Canada. So the Alternative Harvest ETF was the biggest loser on the week, followed by biotech stocks already on a sell signal. Then we've got metals and mining stocks rolling over, back on a weekly sell signal. We also have pharmaceutical stocks back on a weekly sell signal as of Friday's close. And we've also got home builders back on a weekly sell signal. Now, moving on to the Canadian market, the Vanguard Canada ETF, we're trying to get to 53.13. We got to 53.07, so just a couple of cents away. So if you had an order in at 52.99, it should have got filled. So congratulations. Looking at the iShares for the TSX 60, 39.06 was our big number. We hit that last week. This week, we've got as high as 39.04. So obviously there's resistance at that level. And you've had several opportunities to take money off the table up here. So congratulations for locking in some profits. Small cap stocks look like they could generate a sell signal this week with a close below $20.98. We tried to get to 21.88, got as high as 21.84, so 4 cents away from our target. We tried to get through that a couple of months ago, and so you can tell that is a major area of resistance, which we plotted out a long time ago. And then the venture exchange, which is not tradable. We just like to keep track of what's going on with the microcap stocks. And 625 continues to be a major wall of resistance. Now, what didn't work? Well, the energy sector, which was already on a sell signal, continued to move lower this week. The financial stocks still holding up fairly well, inside week for them. And then, unfortunately, the gold sector is still on a sell signal, up just a little over 0.25% on the week. Now, what didn't work? Well, utilities were the big losers. They're still on a buy signal. If we close below this week's low next week, that'll give us a sell signal. We've got the global base metal ETF back on a sell signal, and then we've got the REITs continuing to move lower this week. Now, we're getting pretty close to the end of the presentation, just a couple of more topics, and we'll start off with commodity ETFs, and no changes in the metals this week. Copper still on a sell signal, gold up slightly, still on a buy signal. No change for palladium, platinum, or silver. They're all still on sell signals, so that's not supportive for higher mining stocks. Then looking at the world of energy, we did have crude oil up over 5% on the week, which did not help the energy sector. We're still on a sell signal here. Gasoline is back on a buy signal. Natural gas still on a sell signal. No change there. Bitcoin had a fairly quiet week. It was an inside week for the futures contract and for the big ETF. So no change in trend, and Bitcoin closed above $100,000. Last up today, I'm watching Apple really closely here, looking at the daily chart of Apple, the panic zone chart. We're still projecting higher prices. Our monthly target was 250. Our daily target was 250, and we got as high as $250.80 this week. And so congratulations, you got to lock in profits. That day turned out to be a bearish reversal day. We haven't seen a lot of downward pressure. At the same time, we haven't taken out that signal yet. We need a close above that high to get rid of that signal, and so far that hasn't happened. So here we are. We're still on a buy signal. I'll be watching Apple closely. That could be a clue to when the market wants to roll over, and certainly there's no sign of that going into Monday's trading action. Of course, if it starts to pull back, the first sign that something new is happening if we start breaking down below $242.19. And of course, if we start trading above 250, there's our next target, $257.81. Now, here we are. We're coming up to year end, and people are always making New Year's resolutions. I've got a couple of suggestions for you. The first one is always be upgrading. And when it comes to the stock market, you need to be upgrading continuously. Now, people have the illusion, and it's just an illusion, but it's a very well marketed illusion, that the stock market goes up over time. And that is not true. What goes up over time is a group of indices that are a small subset of all the stocks available out there. And these indices are managed and constantly being upgraded over time. And that's what you need to do. And right now, as we come into the end of December, the NASDAQ 100 is being upgraded. And let me show you what they're doing. Now, if you've been with me for any length of time, you've heard me say that good things happen to good stocks, bad things happen to bad stocks. So we're looking at a chart, a weekly flypaper channel chart, and you can see that anything that's currently trading under the flypaper channel is a bad stock. So the NASDAQ is getting rid of Illumina, it's getting rid of Moderna, and it's also getting rid of Supermicro. And we talked about the nice bounce that Supermicro's had up into the flypaper channel. We also talked about the fact it has to go up a couple 100% before it gets back to where it was back in 2024 when everybody loved it. So the NASDAQ 100 is kicking out those stocks, and they're replacing them with 3 stocks that are obviously winners. So you've got Axon, you've got MicroStrategy, and you've got Palantir. Those are being added to the NASDAQ 100. So those 3 stocks you want to buy next time there's a pullback, and you don't need to buy them coming into Monday's trading action, but the NASDAQ 100 is going to add them. to their list, and that means more people are going to buy those stocks and more people are going to sell the other stocks, the stocks that nobody wants, that the market has already told you we're not interested in these stocks. So it's very easy to see when you look at the Flypaper channel what stocks the market likes and what stocks the market hates, and avoid those stocks. Now, there will be a time where most stocks will be under the Flypaper channel, and what you're looking for is the first ones to break out above it. Those are the ones you want to buy. The ones the market likes are usually the ones that move first. Of course, the other thing you should put on your New Year's resolution list, and even do it over the Christmas holidays, is start donating blood, especially if you're a man and especially if you've got cardiovascular issues in your family history. When you donate blood, it forces your body to create new blood, so brand new blood. If you've never donated blood before, then you're still dealing with the same blood you were born with. And now, if you donate, that blood will get replaced with brand new, fresh blood. And men that donate blood usually live a little longer than the rest of the general population. And of course, if you start donating plasma, you can start to clean out some of those microplastics that have been lurking in your body for a while now. So that's the second thing to put on your New Year's resolution list. But I would suggest you get ahead of that and book an appointment over the Christmas holidays. Okay, folks, that is all for this presentation. I envision 2025 to be an incredibly chaotic year. In fact, I think the next 4 years will be incredibly chaotic with Trump as president. That doesn't mean the stock market's going to crash. It doesn't mean anything for the stock market just yet. The stock market, the economy, the general public, they're all different things. The stock market has more to do with what the Fed does than necessarily what the president does. So we will react to what the market tells us to react to, not what our brain thinks we need to react to. There's no reason to take a position today or to hedge or overhedge anything. We don't have any new data to deal with. The VIXs are still on sell signals. The major stock market indices are still on buy signals. So right now we don't have to do anything. We do know that the stock market is very overvalued at the moment. And you can say overvalued, you can say overbought, it doesn't matter. But this is not the time and place to put long-term money in the stock market. And so if you can counsel anybody just to sit on their hands and wait until the market resets its pricing to a more normal level, that's when you can put long-term money in the market. But it's not the time and place to do that on December 15th. Okay, folks, thank you very much for your time and attention. Of course, if you have any questions, please drop me an email. Otherwise, next time you'll hear my voice is on Monday morning.